Let me know once you're rolling.
It's rolling now, Mark.
It's rolling. Welcome, 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 everybody. This is a powwow between myself and two of my super stud traders, Rustum and Greg. How are you doing, fellas?
Yeah, doing good. Thanks, Mark.
Rustum.
I'm doing great.
Super.
And yourself?
Yeah, well, thank you. Well, well. And excited about this. Even if it's just this call, but maybe we can do more of them going forward, but let's just see how it goes. But definitely excited to do this one in particular, where we're just going to give some insights on sort of a conversation about a particular trade idea, what we like about it, what we don't like about it, and maybe coming to some sort of broad consensus as to whether or not it's a good idea to take a trade, and give some people some insights as to the thinking and logic behind what goes into taking a good trade. A lot of people, you know, especially people who are new or who are certainly struggling, you know, they're just looking at arbitrary chart patterns with very little understanding of, you know, sort of the depth of research or thinking that goes into, or both, that goes into taking a trade. Trades have quality elements to them. Not all are created equal, and the job of the trader, in my opinion, is to spend the time trying to select the best ones. So if you wake up in the morning and you saw 5 setups, they're not all as good as each other. There are some better than others, and even if that means you take a trade and that particular trade lost, but your level of analysis was higher on that particular, you know, and for that to be the trade you should take, that is absolutely epic. That's what you should be doing. That shouldn't be considered a negative thing, if, you know, the ones that you didn't take made money, because you took a high quality trade. There's that quality element to a trade. So with that in mind, we're going to have a look today at the pound yen. No, we're not. We're looking at the pound New Zealand.
Pound New Zealand.
Pound New Zealand. So first of all, from a sort of ideas perspective, as far as I'm concerned with this particular trade, I'm going to put my case forward for why I think it's a good idea. And what we're going to do, Rustum, if this is all right with you, is we're going to jump off the chart for a second, and I just want you to have a look at this news article. It's just in the chat.
I'll bring it up now, Mark.
Okay. So just a side note, Bloomberg have started charging for this information. In fairness, it's well worth the money if nobody has subscribed to that service. It used to be free. It's not anymore. They're going the way of. I've just stuck it in the chat, mate. Have you brought that up?
It seems to be coming up. I'm not sure. What screen are you seeing at the moment?
I'm just seeing the chart at the moment, mate.
Let me see.
But for anyone who doesn't look at sort of there we go, fundamentals and sentiment, you are missing an enormous trick, in my opinion. Especially, it depends on what type of trader you are. If you're not long term and you are sort of technically driven with a sort of the idea of getting out of trades pretty quick, then you probably can dance within the technicals and be okay. Personally, I like to have a little bit more weight behind my decision making. It doesn't mean that that's the best way of doing it. It just happens to be what I prefer. And yeah, Bloomberg subscription. I think you can get it for like $4 for 3 months at the moment. They're going the way of like the Times in the UK, Financial Times, where they're charging for the information because they recognise its value. Bit of a pain because it was free, but now it's now there's a paywall there. But the benefit of it is as follows. So if you just want to scroll up to the headline. Okay, so read the headline.
Is Goldman Sachs big finish for Brexit opportunity in the pound?
Okay, when was this?
This was 2nd of April.
Yeah. So let's have a look. So that's a pretty big thing, right? Goldman Sachs. And I just want to deal with the headline for just 1 second, Rustum, if you just want to go back up. Goldman sees big finish for Brexit opportunity in the pound. So opportunity in the pound, what does that mean? It means pound strengthening. And who's telling you about that? Goldman Sachs, love them or hate them. They are the 800-pound gorilla in the investment world. And I just want to quash before we go any further that the idea that they would somehow sell everybody a dummy to right, like someone. Oh well, yeah, they're saying that, right?
You knew I'm thinking that.
Right, they're going to sell you a dummy. They can't sell you a dummy. They've got to talk their order book up. They've got to be positive their positioning because they can't just take trades in seconds if they're actually going to be long sterling for an amount of months. It's going to take a while for them to get in those positions. That gets everybody wanting to go long sterling, so that's where the dummy side of it comes in. But that's not going to go in straight lines. Along the way, those technical traders are going to get moosed by the Goldman traders and the like in the form of being manipulated along the way. So it's all very well, everyone go, oh, well, yeah, but no, because technical traders are going to get spanked going long sterling. Trading the typical way that traders are taught to trade, technically. That makes sense?
Yeah.
So we dealt with the headline. Yeah, on we go. It's recent as well. You want to check that. Scroll down if you wouldn't mind, Rustum. I mean, right. So that first paragraph, someone want to read that?
Yeah, sure. So Britain's pound presents the biggest opportunity within developed market currencies, with a probable break the Brexit logjam moment coming soon, according to Goldman Sachs Group Inc. We're coming to a big finish here. Zach Pandel, Goldman co-head of Global Foreign Exchange and Emerging Market Strategy, said on Bloomberg TV after the UK Parliament again rejected all alternatives to Prime Minister Theresa May's unloved deal to leave the European Union. We do think we're making progress despite these failed votes.
Right, so that's just huge. Let's just unpack that a little bit, Rustum, so just go back up. Thanks, mate. So the pound presents the biggest opportunity within the developed market currencies, right? So the big sort of G10 currencies, these, and who's telling you that? The 800-pound gorilla, right? Their head of global foreign exchange and emerging market strategy says so too, right? So within the quotes, that's a big thing. It's not only just the headline and getting that directionality, it's how recent is the article, and also, you know, who's saying it, and you know what they're saying in the quotes. You know, what bank is it, and what you know, what's the level of individual. You just think about the cost involved for Goldman to come to those conclusions is enormous. The brain power to come to those conclusions is, you know, for $4 for 3 months and, you know, $34 thereafter, you are gaining outrageous insights to help you have a directional bias on the said whatever. And this happens to be sterling, could be oil, could be gold, could be anything, right? And we're hardly into the article, and I'm very bullish sterling. Now, the other thing that you can do beyond, we're just obviously going through trying to pick these nuggets out of the article, is you can double check if this is right. You don't have to just take their word for it. You can double check it. We happen to live in the UK, so I do rather. So it's not hard to find out the fact that there is no hard Brexit coming. Like, it would be a complete if the EU decided to not extend the Article 50 process, that is the only way we're getting out of it in what is being described as a hard Brexit, i.e. Brexit. It's not. They're not going to do that because they want us to stay. So they're going to give us a long extension, which we'll find out today. There's talk, Tusk, Macron, Merkel are talking about a year extension. Theresa May wants until the 30th of June. She's not going to get it because they've in their negotiation stance. When they pick a position, they are completely in control now. Well, have been from the start. To be fair, we look like an absolute laughing stock internationally, and internally. Net, there's going to be no hard Brexit, and there was a bill passed that was jammed through Parliament the other evening, late at night, 11:30 at night. The Letwin Cooper bill, but it's known as the Cooper bill. Yvette Cooper, Labour parliamentarian and a treacherous Tory, joined forces to basically win by one vote. That there will be, Parliament will not vote, not allow a no Brexit exit, no Brexit exit, no hard Brexit exit. And just for kicks, the person who had that casting vote, that one singular vote that brought that into, that got royal assent thereafter, was a lady who had just come out of prison as a Labour MP with a criminal record, who's on licence, who's on tag as well. So what she was doing at 11:30 at night in the British Parliament, I don't know, because she should be at home at 8 o'clock on curfew, because she lied about a driving offence and she got 6 weeks in jail or whatever it was. She was the casting vote. Having said that, the convicted criminal got that vote across the line. John Bercow would almost certainly have voted in the way of stopping a non-hard Brexit, because he's a staunch Remainer, and he would have that casting vote if it was, an equal amount of votes. So this makes sense. I can double check what Goldman is saying. Does that make sense? We can do that work to find out. So we're not just reading from the article and taking it as gospel. Although you could, you don't need to double check it.
Yeah.
Cool. Keep going down. Let's see if we've got anything else. So I'd like targets. I'd like, it depends. Prices. Here we go. So a second referendum, I think we'd lose if there was one on the Remain side. On the Leave side, I think Remain would win, because there's been so much of an establishment push in the media since day one of the vote. Quote, sterling is maybe the biggest opportunity among developed market exchange rates today. Pandel said the pound slipped 0.4%. 9 a.m. in London, blah, 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 weaker end of its recent range. So that doesn't really give us much, apart from thinks it's the biggest opportunity. We already know that. Let's keep going. Keep going. Separately, Goldman has closed its shut. Doesn't matter. All right. So it's a pretty, well, in my opinion, that's a very good article pro sterling. It's not quite the greatest article. What would have been great would have been some targets as to where they thought sterling was heading. There are articles out there from Goldman, I think, that suggest there's a couple of hundred pips higher in the sort of coming weeks and months. I think what are we cable at the moment? I think they see it at like 145, something like that. What were 131 or something? 133? Can't remember. Top of my head. Room to grow. So that's my case for sterling so far, but there's more. We won't play the video, but he's another link just to pull up. So on our third Brexit secretary, and the EU has control of Brexit, quote, says Stephen Barclay. We won't play it, but he does say it. Basically says they're in control of, you know, how long this extension will be, and that's just a soft. That's just not even going to be Brexit. That's just Brexit in near Morley, or just a, you know, is super Brexit anything could put that. So as far as I can tell, we aren't leaving the EU anytime soon. Yes, there's been some pricing in of that already, but it's not over. Notice as well, can you see all the pro EU horror stories above there? Just notice how bad the BBC is. The BBC is just a fucking joke. Are we stockpiling for Brexit? Brexit a nightmare for women. EU agrees Brexit extension. It's just fucking just comical. How the establishment is lined up against it, right? Feel ashamed.
You don't see anything at the top, argumentative-wise, for leaving, do you?
No. It's completely biased, mate. It's a joke. They did one of the, like, I think it was the ERG, you know, the Brexit committee, who were, you know, the staunch Brexit hardliners. I would just call them Brexiteers. And they did a study on what was the media like, BBC in particular, prior to the Brexit vote. They were amazingly quite balanced, although the audiences are always left leaning. But it's like the coverage was fairly split. Ever since then, it's like 300 or so more Brexit, more Remainers have been on shows since we voted to leave. It's been completely lopsided. You know, you'll watch like a BBC, you know, sort of a political show, Andrew Marr on Sunday or whatever. It's like 5 Remainers versus 1 Brexiteer, or maybe just like the soft Brexiteer at that. You know what I mean? Yeah. Painfully obvious. So next one I've got there as well. So there you got the Brexit secretary basically saying the EU is in control. We've got this article. Actually, you've just pulled it up there below, but I'll just put it in the chat anyway. No, go down. Just scroll down. I don't know why that's sending you the same thing. See the Tusk? There you go. Tusk suggests. Just up a little bit. There. Donald Tusk suggests flexible delay up to a year. So they're just extending it. This is their tactic. They do it all the time. They've done it every time in hopes that the public will change their mind once the establishment continue to batter them with doom and gloom. However, today we can go to Forex Factory. I'm going to bring that up.
One second, I'll bring Forex Factory up for us.
Can look at GDP month on month, manufacturing production. If you had some lesser impact news, you would see quite a lot of green there today. It's been a good day on the news wires for sterling. Just want to do the yellow as well. No, I'm going to do the yellow impact as well, mate, the low impact. Those manufacturing numbers and things, I think. There you go. Construction output. Manufacturing production month on month, massive jump. Industrial production month on month, massive jump. Trade balance wasn't great. Goods trade balance rather. And then indexing services on the money. So sentiment wise, so fundamentally I'm like, my bias is long sterling. Sentiment wise, this hasn't harmed that opinion, right?
No, not at all.
Totally added to it. And then if someone wants to dissect this and tell us what we think of the New Zealand economy, I'll just say we're looking at the pound New Zealand as a trade. Just popped it in the chat.
I'm not going to give my opinion because I don't want to swear.
Excuse me.
Yeah, no, I've always been bearish on this for a very long time on the New Zealand and most of the commodity currencies.
Yeah.
So for me, it's just a long-term bias based on the economies of Australia and New Zealand and their relationships to China.
Yeah.
So for me, when you mentioned that you want to trade the pound against New Zealand, and at first I didn't know whether you wanted to go long or short.
Yeah.
And when you said you want to go long on the pound, so I was game for this call. But if you had said anything else, I would say, no, guys, don't include me on this one.
The big factor directly that's just happened with the New Zealand dollar. If you just want to bring that article up, Rustum, I just posted a new Reuters. Yeah, I don't know why it keeps doing that.
Just 1 second.
No, it's Reuters at the bottom.
Is this one? No.
No.
Oh, here we go. Hopefully it pulls up now. Yeah.
Yeah, that's it. Someone want to read this?
Yeah, sure. New Zealand dollar hit as its central bank joins the doves. If you just want to scroll down a little bit. New York, New Zealand's dollar tumbled on Wednesday on pace for its worst fall in 7 weeks against its US counterpart, after its central bank flagged a possible cut in interest rates, becoming the latest to turn dovish in the face of slowing global growth.
Right, so if we just stop there, if we just go back up. So there's a few things there. So joins the doves. That's interesting, right? That's suggesting there's more doves. Tells us obviously the gravitas of that headline is the central bank are doing that. They signalled biggest fall in 7 weeks against its US counterpart. They signalled the likeliest direction of travel for interest rates is down. That's negative for a currency, becoming the latest to turn dovish in the face of slowing global growth. So if global growth continues to slow, stock markets that are very toppy continue to not follow through. We're at the end of some of these big cycles, debt cycles, business cycles. Slowing global growth is going to hurt the commodity currencies the most. So it's just not good. It's not a good outlook for New Zealand. We can carry on through that article. There's no real point. We could look at maybe the reasons why. Oh, there we go. The RBNZ. Does someone want to read that quote?
The Reserve Bank of New Zealand unexpectedly said that its next move in interest rates was more likely to be a cut, abandoning its neutral stance at a policy review on Wednesday. A slowing global economy and abrupt end to US Federal Reserve policy tightening have shifted rate cuts expectations in Asia to probable from possible. The Kiwi was 1.69% lower at 0.67 cents, and the Australian dollar followed suit, falling 0.83%.
Yes, this quotes here that are super important.
The bank follows the Fed into dovish territory, and it's becoming increasingly clear that there are few central banks that want to be caught on the wrong side of the Fed. I don't know, this guy, Brad Bitchell, global head of FX at Jefferies, said in a note. Meaning, why would you remain neutral or hawkish when the Fed sitting neutral to dovish, he said.
Yeah. So, whether or not the cut rates or not is completely irrelevant. It's that they are signaling, and the markets obviously can then look, a couple of steps ahead, and this is ultimately going to be priced in to some degree, right? And that's what we can take. That's what we can take advantage of.
Yeah, it's the mind shift in the central bank's thinking that will enable us to position ourselves.
Yeah. So, we could go on building a case, but in my view, from a fundamental stroke, a sentiment stroke, global macro outlook, this particular trade, and the complete impasse in the British government to make a decision or get control of Brexit, I just don't see how sterling isn't going to strengthen against the New Zealand dollar. Now then, does that mean that's going to go in straight lines? Does that mean, you might not get stopped out along the way? No, of course it doesn't. It just means, though, that you've got a bias that you can go at the chart with a really strong understanding of what some big major forces are at play, with that up your back, that wind up your back.
Yeah, I agree completely with that, Mark. Completely. The thing is, with me, it's going to be, this bias is probably going to stick with me for a long time. I'll probably never short the pound against New Zealand, maybe until 2020 or whenever, much later in that. Yeah. So when I see a shorting opportunity, even no matter what, how great the thing looks on the chart, I'm still not going to take the trade because of the potential, the potential amount that I can make on that one.
Yeah, and it's a really good point you made, because a lot of people are very determined just to take patterns either way. Whereas when you're focusing on process above anything else, which is what people should be doing, it makes you have that conviction to just go long or just go short of currency until things change. which dramatically improves your chances of all. If you get that right, you know, if that fundamental bias is to play out, you can't really fail to make money. It's a bit like being long the indexes. If you've done that for the last 90 years and all you did was go long, yeah, you'll get stopped out. But if all you did was go long and you made more on the upside than you did on the downside, you fucking smashed it for the last 100 years.
Yeah, that's the plan. Yeah, that's exactly.
And also, you've got the uncertainty between the China-US trade wars. They're weighing heavily on the Australian New Zealand dollar as well. So that also plays into our hands.
It does. We can go into that. You can look at those relationships, in those intermarket relationships, to even deepen this and that. You get to a point where you just go, "Oh fuck me, this is a good trade," right? It's like, you know, you don't need to go so. You know, you can go all the way, but we wouldn't need to even do that to be sat in our saying that's a good trade. And you don't want like group bias, or like group think bias, like where everyone's just nodding their heads, yeah, that seems like a really good idea. Just look at what's in front of you, and you know, does it make sense? Is there a huge amount of positives versus the negatives? And if that's the case, you know, from a retail trader perspective, you're not going to really get a better level of information or quality of trade, you know.
Yeah.
Right, let's go to the charts. So coming up with a trade idea doesn't start on the charts. Who knew?
Do you see the chart yet?
It's coming up. So pound New Zealand. Is this the daily? Yeah.
Yeah.
So we're sideways in the daily. So the first thing to note is it hasn't sold off from that massive drop from those highs back in, what was it, 2000 and right in the mid left-hand side of the chart.
Right at the left.
There you go. Yeah. So if you draw a fib from that high to low, we've not sold off. We've attempted to. Those are golden ratios, but it's never done it. If you drag that higher zone left, Rustum, you'll see it's a bit more significant off to the left. No, just the zone, mate, that you've drawn on the highs. Yeah. Just drag that left. There you go, look. It's never sold off. It's never been able to sell off. At the 61, more or less 3 times.
Yeah.
Hasn't sold off.
Yeah.
Yeah.
The other thing you can note there is you see where that doji is at the bottom level.
This one.
Yeah, that's a stop on.
Yeah. Just see what
the distance of it.
Yeah, it's like 100 pip stop on.
Stop on. Right, so delete the fib. Go up to the monthly if you don't mind. Zoom in. You might want to get rid of them bands, mate, so you can see it a bit clearer. Envelopes. Zoom in.
Yeah, it's completely zoomed.
Okay, mate. Can you just drag that left? There she is. Beautiful. All right, so if you yeah, so go. Keep that up. Keep that up. Oh, sorry. I was just going to say there's a stop on the monthly there. So drag it left from there. Drag it left, left and down a little bit so it encompasses. There, see it? Left, left, tiny bit more. There you go. You could go further left, but
Let's just go all the way across.
there you go.
Oops.
Stop on the bottom edge of that move up. There. See? Up.
Which one are you talking about? This one?
Yeah, so no, the one to the right of it.
Oh, this, yeah.
Yeah, so it's like a monthly outside type stop on.
Yeah, yeah.
Candle. So the current candle.
Now, do you know what I'm thinking here? That this here is Goldman.
Well, it wasn't us that did it, was it?
No.
So if you look, how big is it? 700?
Yeah, 700.
The current candle had gone down first. The wick.
Which one are you talking about?
It's not massive. But
You're talking about this one?
no, the current month.
Oh, you mean this one?
Yeah, it'd be nicer if the wick was bigger, but it has gone down first. Then it's flipped up and it's trading inside the close of last month's close.
Okay.
So if you think of that as the internal workings of that bullish candle playing out, who knows how far it will go up, but you definitely don't want to be against it. If you think what is in play to create a monthly candle to go negative first then flip positive, trading inside of last month's close at a level as well, we want to just try and trade the internals of those monster candles and stop hunt go long along the way. If you want to drop to the weekly, let's have a look at that. And we get above those highs, obviously there's plenty of room.
Yeah, I mean, break those highs. It's there's not much in the way of resistance.
Yeah, no. Daily, do you want to drop to the daily? So we're in the right shape on the weekly. We've gone down, popped up. Daily, we're positive. I'm just in this tight winding, just like a pressure cooker. You know, no new highs, no new lows, just building.
And the fact that it's building at the top edge of that level as well is a reasonably good indicator.
Yep. Before expansion, you sometimes get contraction. You don't always get contraction. You don't always get sideways price, but this is what we currently got. So if we look there, we've got like a week of 5 days. Well, just ask Greg. He's been away for 2 nights trying to get on the trying to get on the train.
2 nights in a row. I think it's been teasing me 2 nights in a row, and we're still waiting. Patience.
Still waiting patiently. 15-minute